Go to webinar control.
I forgot to hit that. All right, welcome back, folks. Good morning. I already started the session about 2 minutes ago, started jawboning about what we're going to be doing going forward. As a reminder, I am also going to be in a live competition, the World Cup contest for the Forex division. Depositing $5,000, which is the required amount to go into that contest, if you will. I'm going to be using the New York session for the first 3 months, New York session trading only. And then for the first 3 months, and then I'll go into adding the London session stuff. But I want to build up equity base and not oversaturate myself with time. But you'll be seeing the things that I'm looking at live, the trades that I actually take. I will not be showing you my live account because I don't want the account number shown or anything like that. But the things that you see me doing in our live sessions in New York session, live sessions, they will be the trades that you see me take, and then you can verify all that with the MyFX book when I open it up publicly. So for all the folks that want to see whether or not I can trade or not, they can take this and run with it, whatever. The things that I'm doing after this mentorship for a signal service, it's only going to be New York session trades. I need to go back to keeping my London session, my stuff. I want to be private about that. You guys will know how to do it anyway, but I will not be doing that as a signal service. So any trades that I do as a signal service after this mentorship, should you have an interest in that, I don't want you to have an interest in it. I want you to be completely confident that you know how to trade, but I know curiosity alone is going to probably want to see what it's like the first month. I'm not trying to sell you on that. Okay, just know that it's only going to be New York session trades. So today's session will have instructions on how to hook up your demo account to a MyFX book during the daily recap. And tonight at 8 p.m. you will have your study notes for February content. And I was just about to finish the email for the satisfaction for February's content, but I had a phone call that I had to take in regards to my son's schooling, so that put that on the back burner. So I will complete that as soon as we're done with our live session this morning. You'll start getting those emails. You should have it by noon today. If you don't have it noon today, New York time, just reach out to me in an email, but just at least wait until noon. Please don't send me emails you haven't got it yet, because it hasn't been sent out yet. So that's the business. All right, so let's get started. As September, I'm going to be allowing folks to come in during the New York session. It'll be open, public, because you've already paid after that point. And September is my free time with you, where you guys get to ask me questions. You will not be asking me questions during the New York session, because that's going to be me doing live trading. So you guys can actually see, well, you'll see live trades that I'll be doing in that Robbins contest for that month. But I'm also allowing folks that would be interested in a signal service. Now, you can't do the mentorship, but if they want to do signal services, they can watch it and see what it's like. They can test drive it for free. And if I make money, if I lose money, they see it every day. I will be trading every single trading day, Monday through Friday, because it's essentially intraday trading in the New York session. And I can find 15 to 30 pips every single day in the New York session somewhere. So that's the business. All right. So no more questions, folks. Let's get through this, because I really, really have a ton of things I got to get done today, and I don't want to fall behind. All right. So we are looking at the dollar index, and nothing's changed in regards to its range. It's stuck still here. I like the fact that it wants to stay above that weekly bullish order block in here. Okay, we've dipped into it a couple times. We've shown willingness. I really like that rejection yesterday, and I really want to see it get above this candle. If we can get above that candle, make a run above here, we will be aiming for the equal highs up here in the fair value gap. That's what I think is going to happen. That's what I would like to see happen. The technicals are indicating that's probably going to happen. If it doesn't start to go higher, it can stay in a consolidation going sideways, and that's acceptable as well. I just don't want to see dollar go down, because if it starts to go down, then we probably want to go below these candles bodies over here, and maybe even retest this level down here, another weekly order block, that mean threshold. So just be mindful that my expectation is to see in a favorable outcome a bullish dollar, and that would hopefully get us out of this range, and then it would free up all the other currencies. And on top of that, I don't want gold to be running again. I want gold to kind of settle down and go sideways for a little while and then break out at a later time. I don't want to see gold rallying. So if we can consolidate in here, that's wonderful. But I don't want to see dollar fail, because that's going to send gold higher. And it's going to be, in my opinion, too much too soon. And I don't want that. I want it to be a longer term basing on gold. Euro dollar, just like the dollar index, it's still stuck. This one here, we've already gone above the mean threshold of this last up candle. So we may need to go one more time higher. So it could be like a 1, 2, 3 drives higher, or in that book, Street Smarts, that I recommend everybody to have, they call that a 3 Indians pattern. Kind of silly little name by 16-year-old. When I tried to show it to him, he was like, what is that? But that's what they call it. It's a 3 Indians pattern, or a 3 drives pattern, basically. It's 1, 2, 3. That may be what's unfolding in this euro dollar. So just be mindful of that. If we lose this last down candle in here, the mean threshold of that candle, which would also be basically this candle's low, if you look at it, it's really close in terms of that level. Let's get a rough idea what that level is using that. It's 105.60 basically. So if we lose 105.60, we'll be looking to fill in this gap and maybe re-challenge the low at 105 big figure. But if we do lose this candle here and break down below it, we will be absolutely going down to 105.20, 105.15. Otherwise, all I'm looking for initially is here just one more stab above this short-term high, just for a third higher high. If we do that and then we reject, then we're probably making a lower low altogether than just this low here at 104.90. Cable, this thing here, man. Me personally, this is how I look at it now. I'm looking at it this morning, and we have two breakers that we're fighting between. We have a bearish breaker and we have a bullish breaker. We're sitting on top of the bullish breaker. But on a near-term, short-term basis, we have a short-term high, another short-term high, and then we have a rejection block in here. All of this buy-side liquidity, there's many, many buying opportunities in here for breakout artists that have been drug across the coals. There's also many short traders that already have their stops taken out also. So now go use that paradigm shift, okay, where we think about the marketplace as a market maker. They've taken out all the buy stops on every single short-term high. Anyone that's caught long now with a stop loss below here or here, okay, they're underwater. The likelihood of them letting them off the hook, not likely. And plus, we've already worked the majority of the buy side already inside of a range. Where have we not worked so much? Below here and here. So now let's imagine for a moment that the cable finds its way to break out and go below here and here. That could be it could be a decent buy signal. It could come down here and take out the sell stops. They've knocked out all the people that would be short, so they can't get that profit objective here. Okay, that would be an objective to reach for, and below here as well. Those targets are no longer acceptable because they have been knocked out of their short because of this run up in here. On a short-term basis, it looks as if they will make a run for the sell side liquidity below this low and this low here. Me personally, I think if it gets down there, that's actually a buy signal. I think we'll probably go one more time into this weekly order block. We hit that, boom, and then it may be off to the races on the upside for cable. Maybe. We have to weigh out some things, but right now, in this range, if I had a gun to my head and saying, tell me right now what you think is going to happen, I think personally, we're going to work the sell side now because we have literally blown out every single reference point on the buy side and rejected harshly and did not take out the low or this low yet. We also have a rejection block in here. I should have that noted. Let's do that now. So the lowest of the bodies on here that's where some liquidity rests on the sell side. So we got 123.75 and 123.70, and then below that 123.40s, 123.30s. Dollar CAD, I prompted you folks yesterday evening to be mindful of this pair. we mentioned yesterday in the live session also that we'd probably make a run. I think I would, if I was a market maker, my words were I would drive it up here and take out these two highs. We had a nice run yesterday, small little consolidation, dropped down into New York session today, had some sell stops ran out. And I did some work with my son on a demo account that we bought that low, and I'm not saying that's a trade that we would take in the mentorship. I'm teaching my son too, so give me 1 second. Okay, so we had the 32.10, 32.20 level above the big figure. This level here on the daily chart, 32.10 was mapped out. We hit that to the pip before, and we left it open. So 32.10 would be resting above that, and what levels? It would be 32.15, 32.20, 32.25, 32.30, okay, in those levels, in those increments. Well, if we have 32.10 as our level, we look for 10 to 20 pip sweeps. So if we do 20 pips above that, it would be 32.30, and 10 pips above it would be 32.20. So far today's high comes in at 32.27. Buy stops are gone. So anybody that's selling short on a double top, wrong. They got burned. This little short-term low right in here, okay, yesterday I prompted you with US CAD. Yesterday, I also told you intraday that this is what we're looking for, and this is the most likely, the probable outcome. We're probably going to see that run up there and hit that. I liked the fact that we had the dollar showing some potential rejection intraday, and that was also a catalyst for this pair to want to drive up to take out these equal highs. I'm going to respond to an individual openly here without mentioning their name because I'm not trying to hurt anybody's feelings or offend anyone, but I just want to remind folks, okay, when we taught the content in January, I gave you specific levels on a day-by-day basis, and I gave you ideas where I thought the market was going to go. And I talked about where the market may not go in regards to the cable. Nowhere significantly higher or lower. It was going to be maintaining a range. We saw that. The fact that we saw that false trend line in the cable, I said that this is going to burn people. Okay, we had one little intraday move lower. A few of you were thinking, oh man, I should have took that trade. And I said, just sit around and wait. And then boom, the fireworks happened. It crushed it. Okay. With the exception of cable, take that completely out of the equation because I think that was the hallmark of the month. I think that's the shining moment. Not that it's a profitable trade because they're easy to do. The finding of opportunities where you want to stay on the sidelines, that is, to me, more appropriate learning than it is to find trades because you literally can put up any old discipline and eventually something's going to find a way to make money. It's just it's a matter of, odds and statistics. If you do keep doing something over and over and over again, eventually something positive is going to happen. It doesn't mean that you have something that's favorable or that you should be investing long-term capital and do that same thing with the outcome for a career. It just means that just simply, go in the casino, people get lucky. But if you look at what we have been showing you just in January, forget all the stuff we did before January, forget all the levels, forget all the content, forget all that for a second. In January, okay, you were told what levels to look for, okay? You already know enough to see how that would frame a trade just from the free tutorials. I'm adding things to all that understanding every single time we go into a new teaching and new content that amplifies all those things. Now, some of them are going to cause you to have second guessing, some doubts. You think you understood it, but then you have something else. What you're doing is you're growing in your understanding. It doesn't feel like it because you already have preconceived ideas about what you think you understand about the content. You're growing deeper in it, and it's going to cause questions and concerns because guess what? You may see something you thought should come to fruition. You think it's going to happen in the chart because XYZ did it last time. That's all part of the process, and that's why I said that we had to spend 12 months doing this. I could give you all the content. I could absolutely do it, and you're going to lose money, and you're going to walk away thinking it was absolutely useless. But forcing you over a period of time where you have to go through it incrementally, that's how you learn it. Whether you like it, whether you don't like it, whether you want to agree with it or not, that's the facts. So the gentleman that keeps asking me, where's the trades? Okay, my question in response to this is, where are your practice sessions that you should have already been doing? Because I'm already telling you on a higher time frame what levels these markets are reaching for. So I told you to put a demo account together. All of you should have a demo account, and you should literally have notes every single day in your own charts where you think the market's going. And I'm going to be real honest with you, and this might piss people off, but this is the honesty that you need. If you can't see the value of me sitting with you and telling you where the market's going at this point right now, forget trades, because I have to do the trades. If I don't do the trades, you didn't learn anything. But you have to have a framework that builds these trades up. Otherwise, I could be buying and selling every down candle and up candle, and it won't mean anything to you, because the questions are going to be, why did I pick that question? Why did I pick that candle? Why am I not using this high? Why am I not using that low? That's what you're learning. You're learning all those things. I mean, just this month, you've learned what type of order to use. Do you buy on a stop or do you sell on a stop? Do you buy on a limit or do you sell on a limit? I have thousands of questions like that over the course of a year, and I just don't want to give that information out. You have that now. What do you do at a specific order block? What candle do you use? Why do you use a specific high or low? You've learned that so far. So when you ask me, why aren't we trading live yet? We aren't trading live in all during this mentorship. We're using demo accounts. There's no live trading. It's all demo based, because you need to learn the application of the tools without any monetary concern whatsoever. Not losing money, not making money. And believe me, $1,800 is nothing. It's nothing. We literally could make $1,800 in the last 3 months. Every single day sitting together. So stop worrying about it. You're worrying about, I'm wasting my money. If you think that, then quit today. Don't even wait to the end of this video. Literally, cancel your PayPal subscription and be done with it, because I really don't want to hear any more about where's this and where's that, because I'm done with this. If you don't feel like you're getting value and you're not learning, seriously, do us both a favor and just quit. Quit. Because I guarantee you, if you're asking that question still at the end of this session today, you are never making money, ever. Not with my stuff, not with Joe Schmo's stuff, not with anybody's stuff. You have a barrier. You need to do something. You're a gambler, and you're trying to do something without any knowledge whatsoever about what it is that you should be doing. This has nothing to do with my ability to trade. If you can't see that I already know what the markets are going to do by now, you should have already quit. You should have already quit. So just either stop with all the wasted time asking questions when I've already put my ass on the line and said I have to trade. I'm putting a MyFX book on today. I'm entering a contest. It's a third-party, whatever you want to call it. I guess it's a way of vetting what I'm doing. Okay, so I don't know what else I can do, and I promised you that you'd be learning these things. Okay, so if you can't see it happening in your charts and the things that I'm talking about before the fact, okay, I don't know what else I can do for you. I really don't. I don't. My goal in this is to teach you how to do this without asking me questions after September. Everyone in here will have access to me still. You can send me an email, hey, look, I just want to double check with something. No problem. But my goal as a mentor to you is you don't need to ask me anything. You should be sending me emails about what you're doing. I'm looking forward to that. But you're waiting for signals. That's all this is. And guess what? Save your money. If that's what you're looking for, cancel. Save your money. Come in here in September and be for free. Everybody's going to have access to it. I can have 2,000 people coming in here. Okay? And you'll sit here and watch me trade live. And guess what? You'll never learn how to trade. You'll never know why I did it. And I'm never teaching you shit. There it is. Either you want to be here or you don't. Okay? It's simple as that. It's the same person asking the same type of question, and I'm doing this openly because I know there's a few of you that are thinking it but just haven't really stepped out there. So please understand that what you're looking at is exactly what you're looking for. You're learning it, but you're I'm halfway through. We should be trading by now. You should be. You should be having all kinds of opportunities that you've already seen come to fruition in the charts. I've already told you where the markets were going. I told you the levels they're going to reach for. I told you what side of the market it's going to pull to. You already have enough to work that stuff out. The folks that are really busting their ass in here, they're the ones that are quietly doing exactly as they're supposed to be doing. You don't hear anything from them. They just send emails, say, hey, look, I did this, I did that. Great. Awesome. They don't need to be coddled. They don't need to be patted on the back. You hang in there, hang in there. If you feel like you need that, I'm telling you, I'm not going to be any help to you in the second half of this. All you're going to be doing is looking for the buy signals and the sell signals. And when the mentorship ends, wow, I made my money back, but I don't know how to trade. You'll be on Twitter pissing and moaning about how you didn't learn anything. And the ones that are actually doing the work and practicing and failing and messing up and learning from that, that's exactly what you go through. That's the process that you have to submit to. But you want the shortcut. You want to get to the front of the line without any of the pain, without any of the trials. And that does not happen. It doesn't happen. So CAD, I prompted you yesterday. I said, look, pay attention. This is the level it's going to reach for. Is that a swing trade? No, it's not. Is it a position trade? Are we going to hold this for 3 months? No, it's too close to the level. Is it a day trade? Probably. But I can't talk about day trades right now because it's outside the curriculum. I poke and I prod you because I know there's a few of you that are impatient and you just sitting on the fence doubting. If you're doubting, just leave. Just leave. Seriously. Save yourself the aggravation because I'm going to tell you, in your brain, that's where it lies. That barrier. You need to break through that threshold that's holding you back because you simply will not do what's necessary. What's necessary? Practice. I don't need to lift a barbell for you. I don't need to get under the weight and lift it off that bench for you. Okay, that's the stuff that you have to go through. You have to do that work. I warned you this is stuff that's going to require you to have work. You just want a PDF file, do this, buy this, sell this, wait for this, do this and do that. And it won't make any sense to you without having all these sessions together. And listening to this ass beating I'm giving you right now. If you don't like it and it offends you, good. Let it motivate you either to quit or pull your shit together and really do what you got to do. I'm tired of a few little folks, okay, that literally could change the whole outlook of their life if they just submit to the grind that's necessary. You have to literally say, I'm not giving up. If you don't feel that, if you don't feel like you're learning anything, honestly, there's nothing I can absolutely do to convince you otherwise. Because I'm telling you, live trading is not going to do it for you. It's not going to do it. All I'm going to do is teach you to be dependent on me. And I'll take your money. Absolutely, I'll take your money. You want to subscribe to my signal service, keep paying it, go right ahead. But that's not what I want for everyone that's listening to me right now. If you're listening to me, I don't want your subscription money to a signal service. I don't want that. Because that's not a testimony that I've done a very good job. And I really am a prideful person. You probably get that right now. But I am very prideful, very arrogant. And I don't want any one of you to end and go through the entire 12 months and feel like, I don't know what I'm doing. I don't know what I'm doing. I went through this whole 12 months and I don't know what I'm doing. I don't want that. And I'm guaranteeing you that you're not going to have that feeling if you go through the entire thing. If you go through this entire 12-month process, my hand to God, and I'll put it in writing, if you do not absolutely know what you're doing at the end of this 12-month course, I will literally sit with the group that says this, and I will handhold you and give every trade possible to get every bit of your money back to you. And you can have that in a signed document from me. Seriously, I don't know what else I got to do to make you feel that this is a worthwhile venture for you. $150 is nothing. That's not what this is about. I want a group of people that I have invested my time and energy in to walk away from this and say, you know what? I am dialed in. I know exactly what I'm doing. I know exactly what I'm doing. Now, I know there's going to be a few of you. I know there's going to be a few of you that are going to tell me, I just feel I'm close to it, but I just want you to sit with me anyway. I already know that's going to happen. But I'm asking you to be honest with me. At the end of the 12 months, if you honestly do not know what you're doing, just tell me. Let me know, and I will absolutely work with you. I will make sure that you did not waste your money, and you certainly didn't waste your time. I don't want anyone that has completed this entire 12 months with me to feel any regret, absolutely zero. Because you're learning, whether you realize it or not, you're learning a ton. It won't feel like it right now if you try to weigh it in the balances, because you're looking, who are you going to weigh it against? How much money have you made? Well, you're doing it wrong. You're doing it wrong. You're looking at how much money you're making while you're learning. I guarantee if I open up the questions box, there's going to be the same three people. They're going to say, oh, I'm paying for you to teach me, Michael. This is stuff for your YouTube channel. I already know it's there, and I don't care. If you think that, again, quit. As a whole, I'm not teaching just to one person. There's over 700 of you in here. Not all of you think this way. But as a group, you all could be encouraging one another. I can't sit down with every single one of you on a day-by-day basis in an email or a live session privately or a phone call or a text exchange or a private DM. I can't exchange like that. So I have to do it this way because I know invariably some of you are thinking this. But I'm okay with you wanting to quit because I can't. There's limitations. I have them. I'm never going to convince someone, because I could have never convinced myself when I was losing money that I could do it. I couldn't be convinced. You have a barrier right in front of you right now. And you need to decide, are you going to press through that? Or are you going to turn around and walk backwards? Because you're going to go the same distance, whether you go forward or backwards. You're going to go the same distance. But the view is going to be something you've already seen. Failure. Regret. I wish I could have. Oh, it didn't turn out like I thought it was going to. You don't know what's on the other side. I do. And I'm telling you, there's a large body in our group that is still plowing ahead, and they are doing exceptionally well with this. If you're struggling, go back and listen to what I said in the previous teachings. Go back and look at the charts where they're noted. These levels are not just pulled out of thin air. They mean something. I pulled them out of the information I've already shared with you. I didn't create anything new. There's nothing that's hidden in a lesson down the road that I'm putting reference to on a chart that you can't understand. It's all there. And we're working on a higher time frame chart because that's where the banks push price. You're all wanting to get down to day trades. Give me a day trade. Give me here. Get me some money. And I told you before, if you can't afford it, don't sign up. I don't want dissatisfaction. I don't want it. Not because I have my ears plugged up and I don't want to hear people say that I'm not doing a good job. I want to know if I'm not doing a good job. I absolutely 100% want to know where the pockets of gray area I need to fill in and bring clarity to it. So when you send me things, I may not reply to you, but I'm making notations about where I need to amplify things. And I may end up adding something that wouldn't otherwise be in my outline for the future teachings or future month. I'm aware. I know what you're asking for. But I know also, because I've done this many times, I know the questions you're going to ask. And it sounds arrogant. But that's not arrogant. That's experience. I already know what you're going to ask me. I already know where you're stuck. I know the few of you that are still talking about data ranges, okay? All those things will come together. We will have to use them in short-term trading. They have to. That's the basis of them. That's all you're doing. You're looking at the 20-day if the data ranges. That's short-term day. Well, it's not day trading, but short-term trading. You're asking to have it all at one time, and you can't. It doesn't work that way. I'm not going to give all the information at one time because this is going to create a plethora of emails I'm never going to be able to keep up with. So, as I said yesterday, dollar CAD most likely going to punch above that 32.15, 32.10 level, right above these equal highs. Okay. What do I mean by that? Study it. Watch and see what price does. What's price likely going to do? Go up there to take out the buy stops. So if we're here yesterday, and this is the level it's going to most likely going to go to, it can't be a swing trade. It can't be a position trade. It's too close to the target. So what does it mean? Study it. Watch it. What are the mechanics behind it? What did it do? Well, this is your daily chart. This is the last down candle. The open. What price is it? 31.64. Well, here's today. What's the low? 131.64. That's right here. It went below a short-term low intraday. If you look at your economic calendar, this is stuff that I already taught you. This is the low resistance liquidity run. You already know this stuff. I told you about it. I told you in detail what to do, what to look for. I told you the level it's going to. I told you how to do a low resistance liquidity run. I told you how to use the economic calendar. If you look at this morning at 8:30, there was a medium impact news event for Canadian dollar. I prompted you again last night. Look at US CAD. What you're asking for is, Michael, tell me to buy at 31.70. That's what you want. To put the quote email, I need it spelled out for me. Man, I am giving it to you in every clarity as I possibly can to show you how you do it. I want you all to say, you know what, it's been great, ICT. If you never make another video again, I ain't going to miss it. I know what I'm doing. I'm dialed in. This morning, the market gave you an opportunity. I don't know how many of you traded it. I don't know how many of you paper traded it. I don't know how many people even paid attention to the US CAD. Some of you, I don't even know what you're listening to or what you're waiting for, but you're just constantly grinding through. I don't ever hear anything bad from you. I don't hear anything good from you. About a third of you are just like that. That's great. If I'm not hearing any complaints, wonderful. If I'm not getting any questions, that means I'm delivering on point. But please, please do me a personal favor, and you as well. Do not send me, if you start to sit down and you want to send me an email, where's the trading at? Okay? Don't even type that email out. Go right to PayPal and hit the cancel button, because you're not getting what you want. And that's not what I want. I want you to want to learn how to trade, know why the markets are going where they're going. Period. It's just that simple. It's just that simple. There is tons of trades that if you go back through what I just already taught just in the 2017, even in this small little consolidation, the markets haven't been moving around a lot. Yeah, they have. No, they haven't. Not in a clear, discernible way where the risk is really low and the probabilities are very high. That's not what this is. Now, if you think you see that, well, go right ahead and go with that and see how long you last. But part of this process and this mentorship is I have to give you a mindset. It's not just tools and techniques and concepts. You have to think like a profitable trader. You have to think like someone that knows what they're doing. Not just getting in here with new toys and getting in here and trying to, bang yourself up. Because just because these things work well for me doesn't mean if I just lay them in your lap, you're going to know what to do with them either. So you have to experiment with them. You have to do the things on a small incremental basis, test things out, and you'll learn from that. You get feedback. And when it's wrong and it doesn't pan out like you want, that is a lesson. And you learn from that. You learn more from that than you do from when it's right. Because when you're right, you think, what? I'm better than I really am. And that's what I fell victim to. So we did drills early on in this mentorship. We lost people because they thought that was trades. Oh, you can't pick a trade. No, what we were doing was pushing you into engaging the market. We have to go in and start doing buys and sells. We have to start looking at short-term setups, and we have to go in and probe these buy areas and these sell areas. And you're going to use limit orders when you should be using a stop order. And you need to see the difference of how you get filled and when you don't get filled. Because these are experiences that you need to learn while you're in a demo. And I already know that some of you are going to piss and moan, why are we doing this? Just get us in trades. I am. I'm getting you in the mindset to know what the better ones look like, because they have simple characteristics that repeat over and over again. They start off looking like something, but then they morph into something else, and then you got to say, no, I'm not going to take that trade. And guess what? You're going to wish sometimes you still took it. And that's okay. And you're going to learn from that. But you're also going to learn many times it starts to do that same thing, and you'll say, I ain't going to take that trade. And it doesn't do anything, or it goes the other way. You need to feel what that's like. You need to see it. You need to experience it. And you get that by your own engagement in the marketplace. I'm going to talk about specific levels. I'm going to tell you it's going to go to this level. It's going to be at this level by this time of day. And you have to do the work to work in between those 2 points. When we start doing live sessions in both London and New York, I cannot be here for 3.5 hours in London and then come back here and trade 2.5 hours in New York. Number one, you will never, ever, ever complete the content by watching the videos by the end of the month. Two, I just ain't going to do it. You don't need that. I'm going to come in, give you the framework for both sides of the marketplace. I'm going to tell you what I think is going to happen and how I'm going to personally trade it. I'm going to tell you what my orders are. I'm going to tell you where my stops are. I'm going to tell you where my objectives are for limit taking. If I'm going to take any scaled out positions, I'm going to tell you that too, before the fact. I'm also going to give you, if this happens, I may collapse the trade entirely, or if I get stopped out and something else happens that requires a potential reversal, this is how I will trade that too. And then the rest will be automated through Twitter. I'll prompt you to a link that takes you into the forum, and then it'll be a chart where you can get the information there. That's the reason why we went to charts going into secured format versus me just doing a print and link it, because that's been shared. When we started doing the signals, so many of you are wanting to do your own signal service. Trust me, there's other people that are friends of people in here that want to do a signal service. Once they see how consistent I am, they're all going to be copying my signal. I already knew that. Okay, so that's the reason why it has to be through a secure set. So that means you have to have, before the London and New York session starts, you have to have the forum open. Go into the forum, open up a chart. That way, when I send you a link through Twitter, it'll go right into the forum and won't be any delay. You'll get right to it. And it'll tell you the same things I'm talking about. Because as I say it, Cody's going to be typing that instruction out on the chart. And he'll create the chart, he'll upload it, and there it is. You'll know everything graphically. You'll see it. It'll be a reference, and it'll be everything you need to have as a scrapbook for reference as you go through the rest of this mentorship. You'll see, oh, yeah, that's what it looked like before it started when he said he thinks it's going to go up to this level or down to that level, and you can experience that. But I can't go into all that right now because there's so many things you had to learn first. How many of you, seriously, how many of you even paid attention to the Canadian dollar? I'm looking at the questions now. How many of you watched Canadian dollar? Well, I'm a little encouraged. You'd be surprised. There's a lot of people saying no. Why? I mentioned it yesterday. And I even prompted you last night on Twitter to watch it. Look at it. For the folks that said no, they probably are the ones that aren't asking, where's the signals, where's the trades? 60 points of a range. 60 points all on one side of a one intraday move. It's not a swing trade. It's not a position trade. But my question to the guys that are asking me, where's the setups, where's the signals, where's the trades? I'm asking you, where's yours? Because I already told you what it's doing. Put some work into it, guys. Aussie dollar. This thing will not move. It will not move. It should be out of this small little tiny, was it like a 10 pip range, 20 pip range? It won't move. So I don't know if we're going to see a move down into the sell side liquidity on this. If we consolidate even more and run away from there, then I think we're going to go much higher than just going above this short-term high. Because if they're not interested in taking these stops down here, they're going to want to bring the stops up higher by letting it run, and then everyone will take the sell stop. Because it may be too much of a range for them to have to drop down that low. So if they rally it up, that'll make everyone bring their sell stops right below this low if it stays intact. Then they can come back down. Run for them then. So Aussie, I don't see anything there. Euro pound. I like this one still. I think we're going to probably make a run on this high. We didn't really break down. And I think this liquidity pull up here may be a longer term draw on price. And then have that fair value gap liquidity void right in here. So before we get to the summer, we'll probably see Euro pound up in the 87s again. I think that's possible. Gold came down, hit our 1250 level, right to the pip. While I was talking, it was up here. So we went to the mean threshold of the last up candle. That's good if we can hold it here. I don't want to see it break down, but I want to see it consolidate in here. The longer it consolidates, I want to see something like this, just on a smaller scale. I don't want the range to be big. I want to see this whole consolidation idea here. I want to see it repeated here just on a smaller scale. Because if we do that, what that'll end up accomplishing is we have a swing low from here to this high. That range from that low to that high, we can project that up, and that'll put us in around 1290s, maybe even 1300s. I like 1320 for gold by June. So you can have that on your calendar as well. And reason why I want this consolidation to be smaller, because we've already had a big consolidation in here. So if we had a big consolidation, we don't want another larger consolidation, because then it makes the structure of the market much more uncertain. And to have a smaller consolidation means that they are not wanting or interested to come back down into this consolidation. So by keeping it in a tighter, smaller range and not allowing price to go lower, what they're actually doing is they're building in longs and not permitting this area to be retraded back down into, and that's really that's going to be very bullish. I like also the fact that we made this higher high here. Okay, and the reason why, now this is something you want to have in your notes. Don't be pissed off because I've been talking harshly to you. Okay, and you got your ears plugged or whatever, and if you turn the video off, this is a moment where you need to be really paying attention, because these are the types of things that make a difference whether you're going to be successful or not. I did not want yesterday to show that higher high. I didn't want to see that rally up. I didn't want to see it do that. I said it would rather be better if it consolidated. Okay. Now, since it has done it, the conditions I would favor is if it stays in consolidation, fails to come back down into this area over here in this consolidation or trade back down to the 1245 level. If it does this, okay, if this pierces above a previous high like that and then goes to consolidation, any future consolidations in here, that is a strong likelihood for it to move higher, not just to take out this short-term high, because we've already done that with this short-term high. In other words, any rally up isn't going to reach for buy stops. It's going to be a expansion where it moves a larger degree in price movement. This is just a run on stops and then a retracement. Now, contrast that with, say, we didn't create this higher high. Okay, say we kept this high intact yesterday and it hadn't been breached. If that was the case, any future rally after consolidation here makes that a suspect rally until it really expands beyond just taking out the high. Those types of trades are hard for me to hold on to. For instance, if let me just draw it like this, and it'll make probably better sense to you. What I learned over the years was, it's to say price looked like that. Okay, let me take this off. Say price created this high or did something like that. Okay, and then we still had the consolidation here. Any future rally, it would be a suspect rally to take out buy stops in this condition, because we didn't have a raid, we didn't see them take buy stops. It's just up air and failure. And it's harder, in my opinion, this is when you look at continuation patterns, go back to our discussion in the free stuff, the early months where I talked about false bull flags and bear flags. All of the chartist people are going to be looking at this as a potential bull flag in this condition. And that's why many times they'll go just above it and then fail and then reject. and then it becomes a reversal pattern. I like actually seeing this. When we have a higher high and then we go into consolidation, because to get above this high is not just a reach for buy stops. They've already done that here. Anytime now we move forward here is more likely to see a sustainable rally. And if we have that condition where we move sideways for a while and fail to get back down to this level here, then we have a really good likelihood to see 1300s on gold. Does that make sense? Do you understand what I just mentioned to you here? Yeah, if you're saying you can't see the gold chart, then it's something on your connection. You have to catch it on the replay or re-recording or whatever it is. Just understand that to see a sustainable rally, it's better to see a high broken like this, that higher high. If that breaks that high, that's more favorable of an outcome for sustainable moves up than that of if this was a lower high. Oh, well, I'll give you an example. It's right here in front of me. I should have been looking at it. If you look at gold here, see that? We have a high, then a higher high, and then what would he do? We went into consolidation, and then we rally through. Did it just go above this high a little bit? No way. It drove extremely higher high. So you want to see highs broken that has already taken buy stops out, because what's essentially done is it's already ran buy stops for those that are short. So those individuals can't make money during that small little retracement and going sideways. The ones that now are short that have buy stops above it, okay, all they're going to do is use those to scale out partials. And that's what hedging is. When I start talking about hedging later on in the mentorship, you'll see what they do and how they move their orders through. This right here would have been a first profit objective, but then they let it go. So we have that same scenario here, just in this fractal. We have a higher high, and in consolidation, we're looking to see that same thing occur here: high, higher high, and then consolidation. If we go above this high, we can look for a sizable move taking us into the 1300s. And this is a good thing, but technical analysis and momentum indicators and stuff like that. If I pull up a momentum indicator, I guarantee you there's a divergence there that's bearish. Absolutely guarantee it. And that's why they hurt you and they fail, because you don't understand the mechanics of why price should be driving up there higher and not making a failure swing, but just blowing right on through it and going higher, much more significantly higher. So those are the things you learn by getting in here and practicing and listening to these sessions and not having trades, because it gives you no worry about, am I making money? Should I move my stop? No. Find out what it is that price is doing. Study it. Where are the opportunities? Where are there not any opportunities? Stay away from those individuals that tell you you have to be learning by trading with real money. I'm telling you, that doesn't teach you anything but depend. If they're good traders and you do well, signal wise with them, they're teaching dependency. This is like a drug dealer. Believe me, I guarantee you, if I simply sat down and did trades with everyone, the mentorship would balloon up to 10 times what it is. It's not about the money for me making it, and it's not about you earning it right now. It's about you learning how to do it. And there's all kinds of subtle nuances that are taught to you that I didn't appreciate until later on when I had a number of years behind me. And then I can say, you know what? I understand the depth of what I know now versus what I thought I knew when I first started making lots of money. Believe me, I know what it's like to make $17,000 a week and have no idea how the hell you did it. But you feel smart because you made money. That's all signals are going to do for you if you don't learn how to trade. All right, silver. Again, same scenario here. I like the fact that we went above the short-term highs in here. We left 1850 open. It didn't trade to it. We were only 3 pips short. Went to 1847, if I'm not mistaken. Yeah, 1847. So if we consolidate, I don't want to see it take it now. I don't want to see it. I don't want to see a run off of this level here. I want to see it consolidate a little bit more. Okay, and we already got 2 candles down here that it's already found some support at. So they did capitalize here. They kept price here. So I want to see it consolidate between 1820 and 1840. I think it's good if we can do that and allow gold to do the same thing. If we do see the dollar index stay in consolidation or drop lower, that is going to send it's going to send silver to $20 an ounce. I think personally, $20 an ounce by the time my birthday comes, August, I think that's likely. But I want to see it on a consolidation in here. I want to see it consolidate for a little while, because all that's going to do is build up more buy opportunities. Because who's buying in consolidations? I'll say it again. Who buys in consolidations? Big money, huge money. Okay. So if they're consolidating, they're not letting price go down, and they're not letting price go up. So it forces traders to go into a breakout mentality. And that's the easiest way for a market manipulator to build open float. If he holds a range and makes clear resistance and support levels, they are invariably going to be like remote control devices plugged into every one of these traders and fund managers, that there's a level where I can put my stop. There's a level where I can put my stop. And if it goes above this level, I'll buy. If it goes below this level, I'll sell. That's the game. That's it. It's all it is. They put traps out there, and they lay it for them, and they put breadcrumbs out there. And these fund managers, they think that their trend following system is the greatest thing on the earth, and they all want to be turtles. And they always end up, most of the time, get souped. That's why we want to see the consolidation here. If we consolidate in here, we have the same condition I just outlined in gold. We already have a higher high. We're already in an uptrend. We want to see it range in here, and then as gold moves higher, we want to see silver moving higher. I don't want to see silver lead the rally either. I want to see silver kind of like just keep pace with gold, because I think later on silver is going to outpace gold. When it becomes obvious that we are really, really going higher on silver, and I think that could happen in summer of this year. If we consolidate and really break down to the $18 level, it doesn't undo anything. It just gives us a swing trade there. But to keep the thing moving higher and not break down any market structure as it is here, we want to see it consolidate. So if we break above this high, it won't be just a poke above that high and then a rejection. It'll be a sustainable move. And then we'll start seeing big weekly candles up. That's the likelihood we'll probably see that on silver. Left chart of silver, not daily. I know I have that weekly there because I want you to see where I got the 1835 and 1845 levels. It's this old low here and this old low here. This low comes in at 1845, and this candle's low is 1836, but we round up because we're below that level, so it's going to be 1835. Okay. Yeah, I don't want to go into soybeans or anything like that. I appreciate your interest in it, but I've already talked way more than I wanted to today. I had an adrenaline dump on you. I'm feeling rather tired, but I'm sure I probably hurt some of your pride today. Some of you that are really strong-willed in here, and some of you that think that I shouldn't talk to you like this or even waste my time talking with these things. I appreciate your opinion, but I'm not taking any consideration to it because it needs to be done. It's all part of trade psychology. It's part of being mature as a trader, because you're going to have adversities. I don't want you being inside this little bubble where you think it's just perfect. Okay, you need to have the adversities. You learn through that. Iron sharpens iron, and you have to have the safety of not losing money at your disposal. You don't want to be wasting money trying to learn something. You don't learn anything by losing money. Lots of it, except for toxic thinking. Can we use the same reasoning in gold for the current daily chart and dollar index? Yes, which is the reason why I was saying earlier that if we go, let me pull up the 4-hour chart on. All right, we have a short-term high in here, and we have another high here that's higher. We came down. We left that high over here intact, and we have all these other levels here that would draw price higher. So I don't think if we do rally on dollar, and we leave the range with this side, I don't think we're going to go up here and poke above this as an equal high or double top and then reject that. This will be a draw on price for them to scale out any longs, but it's not going to hold them back from taking it higher. It'll want to go to all of these objectives, not just to poke above here. Does that make sense? Does that answer your question? Does that create a new one? We ran stops here. Just because you haven't seen stops on the daily or here, you saw buy stops ran out on this high here, right here. That was buy stops ran there and then the rejection. So anything above this high here is not going to be running for buy stops. It's going to be a larger expansion, and they're going to seek larger long-term areas of liquidity to unload any longs they have. Oh, man, you're asking about dollar Swiss. That's just like asking me to talk about dollar yen every day. I hate that pair too. I guess I can start adding dollar Swiss, but I don't really want to do it. Can I just be vocal and protest and just say I don't like it? But you're paying for it, so I'll give you my commentary. I just want you to understand that I don't actively trade dollar yen and I don't actively trade dollar Swissy. So while it's not a advertisement for you to say you shouldn't do it, I'm just saying if I'm telling you my weak hand is those two pairs, my question to you would be, why would you be interested in that? I mean, if I'm good at, playing basketball and I'm going to open up a coaching group, I'm not going to open up a lacrosse. I'm not doing soccer. I'm going to be doing basketball. That's my forte. That's my strong point. So I don't know how to. I don't know how to make any plan on that. Some of you apparently didn't listen. I hate the dollar yen and I hate the dollar Swissy. They are so manipulated. They absolutely are just. I just don't like them. I don't like them, and I just wish that you could understand and appreciate that. There's many things that you could be making money in other pairs except for those two pair. But I had to add it, so I'll bring us to the last pair here, talking about the dollar yen. Yesterday, I said that we were probably making the weekly high. I said that we may be reaching into that 112.80 level. That's these candles over here. And first time looking at it, it looks as if that was a pretty good assumption. We do have sell stops below here, and I said that we're probably going to reach for that 110.90 level. Okay, so I would expect that to still unfold. It certainly looks like it wants to do it based on today's action. It was pretty much right on point with what we were saying yesterday. I just don't like them. I don't like this pair. I don't trust the pair. It can be very easily manipulated by anything that the Japanese say, and I have nothing against the Japanese. I've trained martial arts since I was 7 years old. It's not a racist comment. I just can't stand their currency because it's highly manipulated. What about pound yen? Tell me about it, because I'm not talking about it. I'm not going to do that. I don't do exotics. Let's see. Just yeah. Well, I mentioned the other day about my oldest son. He and I had a discussion, and I think I hit pay dirt with him. He sees, obviously, lots of money come through in my trades. He sees lots of money coming through with this mentorship. He's always seen money coming in. And in his youth, years ago, he was, I think, just basically waiting for, a handout and say, here it is, and go have fun with it. I have not made any bones about it. They have to learn how to do this, and I'm not going to manage their money for them. The only one I'm willing to do that for is my daughter, because I just know that she's just not going to do it. I know enough about her. She's not going to be disciplined enough to do it. So I don't mind helping her in that regard, but whoever she marries, I'm going to tell them, look, to get my blessing, you have to learn how to do this, because I'm not going to support your wife the rest of her life. But my wife says different, but that's just the way it is. But my oldest and I, we had a conversation, and I was explaining to him that he doesn't need a lot of money to make a lot of money, and he doesn't need a lot of time either. He's going to be 22 this year in October, and that's young. I mean, that's really, really young, and that's about when I was really hitting my stride. I knew what I wanted to do at that age, and I'm trying to recultivate that whole moment in my time of a young man, but I know so much more now, and I'm trying to instill in him the lessons that I'm trying to instill in all of you, and you're all kicking and screaming just like he is. And I know you're probably all thinking, I get this all the time, my kids should be all-star traders because they live with ICT. I live and breathe this stuff. If I had Cody walk over here where you can hear him talk, and I asked him, do I not do this day in and day out and live and breathe it even before I did the mentorship? And he's, yeah, this is it. I mean, this is all I do. I knew this business. I knew how it's done. But just because he lives in the same roof with me, I don't bridge that gap just because I'm his dad. I mean, he can't do anything better than our best student. Now, I don't want it to be like that. I want him to have the home field advantage. He's living, in close proximity to the very person you're learning from. So if I'm not able to help him, then I take great offense to that because I need that. Like I said, I'm very prideful. But the communication we had in regards to making money was, if we understand we don't need a whole lot to make money, and we don't need a lot of time, we don't need a lot of movement, we don't need a lot of equity. We just need a compounding effect of something that repeats itself over and over and over again. That's what I taught in the free tutorials. I did not give you a teaching technique. I didn't give you a trading concept that you can plug and play. I gave you a toolbox, and you choose which one you'd like to work with. My son refers to Bob Ross a lot. He's the real hippie guy that paints, whatever landscapes or whatever. You talk to the guy, if you got a stressful day, you watch this guy, he's relaxing you. Okay, he's better than pot. So, and I don't know that by experience, but I'm telling you, I was always relaxed by it. Well, this guy could grab a paintbrush, okay, and literally do amazing things with it, and you would never expect it to happen. But he could also do similar things with other paintbrushes. He just elected to do things conceptually with one specific brush because it gave him a better efficiency. He had to do very little work to get that same effect, but he was very versatile with being a painter. Well, I taught in the free tutorials that there's all kinds of ways to make money. Now, I'll just, as a poll, just to keep you engaged here, if I were to say, how many of you want to make your trading career on the basis of making 100 pips per week? Not that I'm trying to talk into that, but right now, as you're thinking and your current understanding, how many of you would want to make, that's your career, you're trying to make 100 pips a week? If you give me a 1, that's you. Not that you're saying that you wouldn't like it. Everybody would love it. I mean, give me 100 pips, I'll take it. I'm saying, how many of you think right now that's what you want as your career? There's a lot of ones. How many of you are thinking that if you could get 200 pips per month, that could be your career? How many of you are thinking that 100 pips per month, that could be your career? Wait a minute now. That's the other way, Michael. We're going the wrong direction. The point is, all of you are going through that same thing. You're going through that discovery of what you see is easy. Price is universal. It's fractal. It doesn't have any advantage over being in a lower time frame or a higher time frame. For analysis purposes, the advantage is the higher time frame works better in terms of prognostication. But there's no advantage in trading any one time frame over another. There is absolutely zero advantage. Which one makes better sense to you on an individual basis? That's what the astute student, the most apt pupil right now in my group it's hearing my voice right now, they are the ones that are doing that work to decide how are they best using this information. Yes, you can make money position trading, and yes, you can make money scalping. But in between those two bookends, that spectrum, where is it that you as a trader are going to flourish? I can't bridge that for you. And that's the reason why we have to do 12 months, because you're going to look at things like position trading. You're going to look at things like swing trading. And maybe you already say, I'm not doing any of that, Michael. I already know I'm one shot, one kill. I'm taking a trade on Tuesday or Wednesday, and I'm holding for a couple days, and that's all I'm trying to do. And I'm okay with that. Save your swing trades, save your scalps. I'm not interested. And some of you think that way about your scalping. You don't want a short-term trade. You don't want a swing trade, or you don't do any position trading. You just want to scalp. You want to get in there for a session, hold it for 30 minutes, make your 15, 20 pips, and you're gone. Who has the advantage there? No one has the advantage. But all of you that are struggling right now are held up on that concept right there. You're thinking, well, that's not for me. I don't want to learn that. So I will endure this to get to that. I had to endure 6 months of this stuff, Michael, to get to what I'm learning right now. No, you're not enduring. You're learning. All that stuff works together. Because think about it. Let me ask you a question. How many in here are looking to be a scalper? Now, be honest. Give me a 1 if you're looking to be a scalper. Good grief. There's a lot. There's a lot. I wasn't expecting that much of a response. I thought for sure that, I'd get a little bit, but it's still going, all ones. Wow. Well, I was going to say something in regards to scalping being the least. That's why we made it last. It wasn't I'm saving the best for last. It's the least in terms of what you need to do to make money. But to me, as a scalp, that's 20 pips. 15 low end, but usually if I can't get 20 pips out of it, I'm not interested. So if it can't frame an idea of making 20 pips, it's not worthwhile to me. So my question to you is this. If you can consistently go in 3 to 4 times a week and take out 15 to 20 pips, is that something that would be worthwhile for your exchange in time and looking in the charts and being in front of it every single day? Some of you are actually, yeah, good. Now I'm getting better responses. There's still lots of yeses, but I'm getting, is what's the risk to reward? What's the payout? Which is the risk? Where's the stop? And it's not worth my time. I'd rather trade on a higher time frame and do far less and make just the same. That's the answers I'm looking for. That's the right one. Because it goes back to there's no advantage. How much does your personality have an effect on your trading? Tons. If you're high strung, you're a scalper. You absolutely are going to excel as a scalper. But the problem is going to be you may not have the ability to get in here and sit in front of the charts for every session. Maybe you have a business or a job and you can't do it. So you have to develop as a short-term trader, or you have to develop as a swing trader, or you just are going to struggle. So that's why we have to think about things from a mental standpoint. We have to go into a psychological evaluation, and we go through all of the realms of trading and disciplines, and we build on every one of them. And let me ask you a question. Which scalp, if you're trying to buy, which scalp makes better sense in probability terms? A scalp that you're trying to buy the euro dollar, okay, in the London session or New York, it doesn't make a difference. Let's just say it's New York session. Say you want to be a buyer in euro dollar, and you're scalping, you want to be out before 10 o'clock in the morning, New York time. So your hold time is about 90 minutes or so. If you're holding for that to occur, now it doesn't mean you're going to hold for 90 minutes, but you're allowing up to 90 minutes for the trade to pan out. But you're trying to make 20 pips, and you're trying to buy the euro. Which condition has highest probability? If that same scalp you're trying to take is in alignment with a position trade in a market like the euro dollar being in a bullish state where it's in a position move, it's in a long-term weekly and daily buy program, and it's in a short-term recent buy, and London has already made the low of the day. Is that a high probability scalp? You can't get any better than that. You can't. It's literally a loaded deal. It's a lead pipe cinch trade. I mean, it's literally like taking candy from a baby. Now, if I were to say to you in a PDF file, okay, in terms that we haven't given yet, that really equate to that type of scenario, it wouldn't make any sense to you. It wouldn't make any sense whatsoever. But I want you to understand, by graduating from a higher time frame down to a lower time frame, you'll be able to go backwards from a lower time frame up and be able to define in very specific terms what makes a trade high probability. See, you're all thinking what order block and what void and how do I know when the structure breaks and when is this a stop run? You're asking those questions because you have not completed the entire mentorship. And that's a normal response, and it's a normal question. There's absolutely nothing abnormal about that. That's all part of the learning. But you can't appreciate what is coming until you have digested all the things that you're getting now. And if trades are in your way of your learning, I'm telling you, nothing new coming is going to help you. And I mean that. I mean that. I mean it 100%. It's going to be a detrimental effect. It's going to have a detrimental effect on your learning. It's just as plain as I can't make it any forthcoming and blatantly obvious than that. Because my delivery of the content is focused on you understanding why the market should do it. Period. In September, it's open doors. Everybody gets to watch me trade for a lot. You know, you're not going to hear me talking. I'm just going to have music playing. And you may not like the music I'm playing, but I'm not in here to talk to everyone. I'm in here trading. You're hearing what I'm listening to while I'm trading, and I'm doing my thing. When I'm done, the session's over. If you did everything I did, you'll make money. And there you go. And after 1 month, people will already see that I know what I'm talking about, and they'll have what they need to pay for the first 3 months. And I ain't got to worry about it. I'll have people pay me for as long as I want to do it. But I don't want to be spending my time with individuals that are not listening. Okay? If you're not listening, if you're not practicing, if you're not really putting the effort into this, I'm telling you, the stuff that we start doing in the second half of this mentorship, it's more work. it's more practicing. So if you haven't done it yet, you really aren't going to like what's coming, because it requires you to be practicing and looking and studying, not spending time on social media. You need to be really focused and dialed in. Because if you don't do that, you're going to miss all of the gems that's waiting for you. And you're just going to gloss over top of it thinking it has nothing to do with you. And it's exactly what I failed on as a trader when I first started. I had all these opportunities to learn from specific mistakes, but I didn't have someone like myself to say, hey, don't you take another trade yet. Go back and look what you just did there. I was trying to get that money back. That's what I cared about. I didn't care about learning. I needed to get that money back. I needed that money. I wanted that money. I had to have that money. Because if I took another loss, I'd freak out. And I know what that feels like, but I'm also on the other side now, and I'm telling you, that's not what you should be worrying about right now at all. 12 months is nothing. $1,800 is nothing. You literally can pull that out in a short period of time with very little effort. Very, very little effort. But you're not going to believe it until you see it, and I get that. And some of you, even if we went through the whole process of getting the trade, you'd be like, why are you doing this? Teach me how to do it. And I appreciate those individuals. But I also have a group in here that I have to be honest with, and I have to be direct with, and I have to be a teacher. I have to tell you that you're thinking about it wrong. Because if I let you leave and you think that this is the right way to feel about it, it's not. And I want to remind you that you won't find success in anything if you think that way. You're trying to put the cart before the horse, and it doesn't work. You have to do things the right way, and you're going to have to sweat. You're going to have to grow. You're going to have to learn. And it takes time. That's the very first thing I talked when I came out on the scene in 2010. I warned everybody, you want it now. Have it your way trading, and this is not what this is. This is career building. This is life-changing. It's destiny creation. And you cannot get this overnight, but you can absolutely change your whole landscape if you just suppress those normal desires to get instant gratification. I know it's hard. I know it's hard, but I promised you it was going to be hard. And if you don't have it in you to do it, no shame in that. In fact, I got a lot of respect for that. If you can't do it, if you can't grind it out to do what's necessary, that is very respectable, because a lot of people waste money and time never acknowledging that when they're just better suited to do something else. Go to the casino to play lottery. You probably do better off doing that. Play scratch offs. But this requires work. It's effort, and you're trading against the smartest minds in the world. Okay, in the world. And they are greedy, and they will do everything they can to keep the advantage in their side. But you have to know what they do, because it's the same thing. They always do the same stuff. They have a specific playbook that they stick to. And the only time it changes is when interest rate markets come into the equation, or something, like a war or something like that nobody really can prepare for. But you have to have that mindset, because if you don't, I'm promising you, you will not get it, regardless. And Charlotte, yes, I've seen your comments. The elements that you're learning are all components that get drawn together, and you have a complete system, and you'll be able to know how to go into the marketplace. Whether you're a trader that is a scalper only, or if you're a swing trader and you settled in on that, you'll know by looking at the market what we should be doing right now. And if it's highly favored for day trades and scalping, that means that you don't do anything. Doesn't that give you clarity? I mean, think about it. Does that not give you clarity if you understand the entire market from a whole, and you can break it down? You may not be a scalper or a day trader. And if you see that that's the conditions we're trading right now, why would you want to even be worrying about the market? That's what everyone's missing. Chris Laurie does not teach that. Trade and Power Group, they don't teach that. They teach patterns and things like that. They don't give you a whole complete understanding of what is going on in this marketplace and how to go in there and trade accordingly. When to stay on the sidelines, when to trade a certain way, when to expect the market to go into consolidation, when to expect that breakout to occur. Nobody teaches that stuff. They give you these gimmicky things. And that's what I wasted my first 10 years on. It's stupidity. It's nonsense. Once you get to the core essential things that make these markets move around, there's no comparison to it. There's nothing to be worrying about. There's no new thing to learn. There's nothing new under the sun. Now, once you get through these 12 months, there's nothing new under the sun. But you're not learning things that have been taught to you by a book that you can find somewhere else. The way we're going to pull these reference points is in terms of like the data ranges and the PD arrays, how they blend together. It gives you context that you can't get from any other discipline, because it's not there. They focus on patterns. They focus on signals. You can't get to that point and say, okay, I'm going to be successful. There's got to be a time for you to decide there's no trade for you right now. And lots of these folks that have all these trading plans and decision making processes that they call their strategies or their edge, they take a lot of trades. They take a lot more trades that's necessary. And I guarantee you, if you interviewed them and they were honest, they would wish they could go back and know why that bad trade was low probability. But they had a signal, and their system says do what? Take the signal. And that's the wrong way to do it. That's the wrong way to do it. But that's today's session. And I got a lot out that I wanted to get out. Over the last 2 weeks, I've had a couple things on my agenda that I wanted to speak about. So I just let it all out today. So if you endured it and you didn't feel like it was necessary for you to hear it, thank you for your patience for that. For the ones that needed to hear it, suck it up, because this is good medicine for you. Believe me, it's what you need. And if you've decided this is the last month with us, I wish you nothing but good luck and good trading. But just what I said today, I meant. And just keep that in mind. Dollar yen looks like it's going to be reaching for those sell stops right below here. So let's add a level on our chart on the daily, so that way I'll have it there today, hopefully, if we get that run out. No, I did not send out the satisfaction agreement email yet. I got sidetracked this morning with my son. But when I'm done with this recording, once I compile the recording and I get it up online, I'll send that out to you. I have till March 3rd anyway, so if you get it in your email, don't sign it until you get the PDF file, because really you're signing it before you receive everything, so it really technically isn't accurate if you're saying you're satisfied and I delivered, because I didn't do it yet. 8 p.m. tonight, if you're going to sign that satisfaction agreement and you wish to continue into March, your payment has to be to me by March 3rd. That's the deadline. And I know some of you have skipped payments, and I'm sure it has something to do with the short month, February 28th, today being the last day of the month. If that has happened to you, just be mindful that your service will be interrupted until your payment processes. So your service will be cut off, or your access will be cut off tonight at midnight if your payment has skipped, because it's going to be putting you past the 3rd. And you simply just wait around. We're not doing any teachings this Friday anyway. Just wait around, and then I'll activate you, or Cody will activate you when your payment processes. And that's the business. So I'm going to close this one. Wish you a very pleasant afternoon. If I do not answer your tweet or your email, just be reminded, this is the busiest time for Cody and I. So I'm really, really, really occupied with moving things around and getting people established going into the new content. So just be a little bit more patient, more than you are normally with me, and I will get to your concerns or whatever. If it's an emergency, like there's a service issue, just send me a text. That way I know I have to take care of that right away. But if it's not something that has to do with you being able to get in or access the content, just send it as an email or send a tweet, a post like you would normally, and I'll get to you as soon as I possibly can. But over the next 2 or 3 days, it's going to be busy for us. So just bear that in mind. I'm not trying to ignore anyone, but some folks, sometimes they think that I'm just like I'm an artificial intelligence, like I'm always around. It seems like that because you always think I'm awake, but I'm a real person and I'm balancing a lot of things right now. So if you give me that little bit of time, I'll get to you. But again, if it has anything to do with access, or if you can't get in, send me a text message. My phone number is on all of your receipts, so that way you can just shoot me a text, let me know your Twitter account name, and that way I can pull up your information that way and I can set you up. But apart from that, I will talk with you all today, later on in the afternoon. And this evening, I'll be tweeting through the free Twitter the link to the MyFX book to my live account that I'll be using for the Robbins contest. Okay. And tomorrow we will be meeting at 8 a.m. and that will be for this week remainder. And I think we'll probably start doing 7:30 to 8:30 in the morning as our normal time for the month of March, because I want to make sure that we have the New York session encapsulated, so that way we will know what we're looking for and we can frame it out, and then I can let you guys go about practicing and using that information going forward. Until later on, and until I talk to you again, I wish you good luck and good trading.